big question in Forex trading is, can you get rich off of trading Forex? And the simple answer is yes, you can, but the reality is most people will never reach that goal. So you probably have it in your head or some vision that this is what Forex trading looks like. A huge house, multiple sports cars, multiple ladies or girlfriends or boyfriends. This idea was manufactured by TV shows, by movies, and by all the gurus online saying that how you can make millions off of trading just with the click of a button. And it's never that easy. I have 15 years of experience in this field, and I am a full-time trader. I have been doing full-time trading since January of this year, and I make enough money from my trading and from my trading business for a full-time income, more than a full-time income. I'm living well below my means right now, purposely. I could own a Lamborghini right now if I were really wanted to, but I'm fine with my 2014 Fiesta. I'm totally content with that. And I'd rather just save the money that I'm making right now for when I do want to spend it for like a nice vacation or trip. But that stuff doesn't really excite me. And I feel like that's one reason why I've reached my goal of doing this full time, is because I am conservative. I'm not crazy, because the thing is that if you allow your emotions to take over and think, oh wow, what happens if I could turn $1,000 balance into 100,000 in a year? Because I've seen some people do this. There are so few people that actually do that. Most of the stories are complete scams, and they're not real. They're just to get you to purchase a product and basically scam you. Most of the things online that are stating big riches with trading are just trying to make money off the sale, and they're trying to scam you, and that is with 90 to 95% of the products online. My business is quite a bit different. It's only based on the stats and real facts of the actual trading tools that I have available to the public. And I've built my business on that. And so when it comes to trading and gaining that wealth that you've always been looking for or wanting, you got to be consistent with your trading. You have to be conservative. You can reach those goals. They can happen. But the majority of traders, or even seasoned traders as well, get emotional, and they want to reach their goals too quickly, causing emotional trades to take place, causing streams of losses or massive losses on the account, even bankruptcy as well. So these things can happen because people are too anxious and not patient enough to get to their goals slow and steady. That's something that I was able to do. And I'm going to be talking to you about a system today that I've developed that has a 100% win rate right now after a month of trading. That's 33 trades and 100% win rate. And the pips that have been made so far are 294, so it's almost 300 pips. This is what the system looks like. You can see that I've had 294 pips right here. So this is the system. It's only 4% profit. You're gonna be thinking, oh, that's nothing. But the thing is that this is a 100% win rate on the system since it started. You see right here, 33 trades. Okay. You can see that this week I've already had 69 pips, 100% win rate of five trades, and we have had this month 1.86%. So the thing is that I'm really conservative with my trading, and this is what good trading looks like. You're probably wondering, why are you saying that 4% is such good trading? And it's because we're talking about win rate, we're talking about how many pips are being made, we're talking about the system involved, we're talking about the drawdown, because the drawdown on the system that I just showed you that has a 100% win rate with 32 trades is only 2.38%. That's so small. Yes, it will probably will increase over time as the strategy gains more of a track record over the months and years. But this is good trading. And it's important to not abuse a good system by over-risking it by being dumb. Most traders will see this and they will think, whoa, well, if you have a 100% win rate with only 2.38% drawdown, then why not scale this up by 10 times? So therefore, you'd have about a 20% drawdown, and your profit would be 40% with a 100% win rate. That is a dumb move, and that's what most of you are going to do when you see something like this. You're going to abuse it because you have the greed behind your trading. And I urge you not to go down that path, because that is something that's going to get you into trouble. The system needs to have losses. Losses will happen at some point. Yes, I have had a month of trades without any losses, but losses are very few because the system has a 94% win rate. But losses will happen, and they need to be recovered in a safe way. And if you're over-risking the strategy or your system in general, you're not going to be able to recover the trades because your losses are going to be too wide and too large, and you're not going to have the margin to recover. This is what I see with trading all the time, and I try to build my channel to educate all of you to stay conservative, because that's where the trading wealth in the Forex market is. Okay, so this is the system I'm going to be talking to you about today. This is the Pinpoint EA version 1.7. I just released this today, actually. So as mentioned, again, 4% profit so far since this has been forward tested for the last month. This track record is saying not verified right now. That's a MyFX book issue. You wouldn't be able to view this. This track record is public, and you wouldn't be able to view it if it wasn't verified. Okay, MyFX book doesn't allow that, so they're having an internal issue again with that. So the 2% drawdown is still really low, and it's been really low. This will go up over time. I'm expecting it to be in the under 10% range 95% of the time. So we may exceed 10% drawdown at some point. But right now we're looking at, I'm just refreshing the page. Okay, so today alone I've had one trade already. So that was a 0.14% gain with 15 pips profit made already. And this week at 5 trades, and this month 16 trades overall. So really solid numbers. As you can see, 33 trades, 1 out of 33, with no losses so far. We still currently have a trade that's in the market right now on the Euro US dollar. All right, so that is the Pinpoint algorithm, and I'm really happy about this algorithm. I think it's one of the best that I've ever created, and I'm going to show you what the algorithm looks like, or parts of what it looks like in the rest of this video. So we have 2 indicators that we're using, and this is the super trend indicator, and I'm going to zoom out a little bit so you can actually see what this indicator is. I talked about this indicator in one of my last videos. This is the super trend. I can't remember exactly what it's called. There's a bunch of super trend indicators, and there's a bunch of mods on this one. This one's a slight mod, but they're all pretty much the same. And maybe I can put a link in the description. We'll see below this video. So this is the super trend indicator on the 4-hour chart, and you can see that it's already showing really good trends on the pound Japanese yen. So I'm going to be using this pair as an example today. Okay, so the indicator that you see down here, this is the RMI, and this is used in most of my strategies because I feel like this indicator shows so much on chart. It shows you where price is going, where price is potentially leading. So there's a lot of valuable information. It also shows overextended markets, and I've said it before, there is no overbought or oversold, but it shows you a good amount of space in the market. So like, for example, here from the top to the bottom, the indicator does a good job showing you where that top is and where that potential bottom is as well. So you might say it's a little bit like the RSI or the stochastic indicator or the CCI. All these indicators, those past indicators, are really quite old, and I feel like this one shows a lot more information than those previous indicators that are almost useless. Okay, so what we're looking for here is trading with a trend. Okay, so this is on the 4-hour chart, and we're looking at entering after the dip happens. So we're going into the below 30 territory, and we're waiting for the price or the momentum. This is the RMI, which is the relative momentum index. We're waiting for it to cross and close above, crossing back above the 30. So we have momentum back on the upside within the trend. So what that looks like right here is an entry right around this point, You can see right here we have another entry which would be right around in here. And here we have entries in here and more in here. Okay, so those would be our entry points within the idea of the system. So, you know, when trend trading, we're always trying to get the bottoms of when the market decides that it's going to swing back around, right? So that's what we're looking for, is to buy on the dips and to let those profits ride. It's easier said than done, especially when the trend ends. So the trend ends right here, at least our indicator was showing us that the buying stopped at this point. So what about all the people that entered during this bracket of price, where all these people entered expecting the market to go up, and they all got wiped out right there? And that happens at the ends of every trend. So for example, this one right here. So you have people trying to buy on the dips right here, 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 and here. And then when the trend actually changes, so when people start to buy on the dips again, like in here, expecting to go up, that's when the trend changes and it goes down. So what I'm trying to say is that most people that are showing you cherry-picked trades are not really showing you what happens when they're wrong, when the trend changes, when the trades don't go in their favor. Whenever you're watching somebody online or you're seeing screenshots of unbelievable trades, you start to think that that trader is an amazing trader, and I need to follow. I need to buy their system. I need to get mentorships. That I don't care how much it costs. I'm going to buy whatever they're offering. And that's the problem, is you are just gullible in that situation, because you see that there's a lot of potential there, but you're not seeing the full image. You're not seeing the whole picture. And the thing is that most traders don't talk about what to do when the trend actually changes and how to handle those losses. Nobody's giving you that information. And so what I've done is I've created algorithms that handle those very tricky times for you, and showing you what good systems look like, where we're buying in the dips here and here and entering into the market at those points. And these are the kind of systems that I've been developing for the last many years. And even though they show really good trades, they're still not perfect. And you still have to figure out what to do if you're a trend trader, what to do when that trend actually changes, and how to minimize the actual loss or the damage that happens from that. And here's another one. Look at this massive trend. So we can enter the market right here. We can enter it right up here. So these are the entry points with using these two indicators together. You can see that there's hundreds, potentially thousands of pips that are within this combination of using the RMI and the super trend together. And that's what my pinpoint strategy uses. So going to my pinpoint algorithm, I'm going to delete the photos there. So this is a mod of the pinpoint strategy. And in this mod, I'm looking at, this is what the pinpoint originally was called, was the ENG candles. This is not available to the public. This is the first name that I had, and I later changed it to the pinpoint, just so you're not confused about which algorithm this is. All right, so we're using a stop loss of 50 pips and a take profit of trailing stop of 150 pips with a 10 pips step. So that means that once we go to 150 pips, the profit is locked in, and we look for a 10 pip increment to raise or lower that trailing stop. Okay, so this is what the strategy looks like using a 50 pip stop loss and a 150 pip trailing stop loss. So we're doing a 3 to 1 risk reward ratio. And the 3 to 1 is what I see here and see so many traders using online about. This is the holy grail type of risk management. This is what you should be using. You should only risk 1% of your account and have a 3% risk reward on the other side, where your profits are 3 times larger than your stop losses. And this is typically what a strategy looks like. And I did a back test, just a short back test. I don't know how long this was, but I should let you know. So over the course of, so I started in 2010. So this is about a year. And this is what most 3-to-1 risk-reward ratio systems look like, where because your stop loss is smaller or shorter than or less than your take profit, you're going to have streams of losses, just like this right here. Streams of losses. And then when you start going on a profitable run or a profitable market phase, you'll start hitting things like this, where you'll almost hit straight profit all the way up. That is the reality of trading. And that's what most people can't handle, is these streams of losses when they happen in real trading, because that's what happens. That's what trading is. But most people don't want that. They want to find the holy grail system. They want to find something that never loses. So I'm going to change a couple of settings to show you what a little bit of tweaks can do with this strategy to give you an idea. So what about changing this to 1.5? So we're going to add a small martingale to this strategy. So the orders, the next orders will be slightly increased risk to help with the losing trades, with the cycles of losing trades or the streams of losses that happen. So I'm going to be ending this video soon, so I don't want it to be too long. So I'm going to wait for this test to go. Okay. So this is what the strategy is going to look like with a 1.5x increase each trade, each consecutive trade. So, for example, so this trade was 0.3 lots. The next trade was 0.5. The next trade was 0.8. The next trade was 0.12, and that one was a win. So that was a winning trade. I'm going to get rid of the grid here. Okay, so this is what we're looking at now. It's looking much better because we're able to recover those losing streaks a lot better with a lower risk semi-martingale strategy on top of that. Now, this is only going to go for about, let's see, so it's only going to go back for a year. But look what happened. We lost our account, okay? So the risk management is showing that we had too many losses in a row. And I'm going to show you what that looks like. Okay. Now, even with a system like this is exactly what I'm showing you right now, is entering on these points. And you're thinking that this is an incredible system. I would purchase this for $500 because it looks so good. But the thing is that when you actually go out, you'll see that there are some points where the losses are substantial. So we had the win right here, right? I'm going to zoom in a little bit more. But what about these losing trades? 1, 2, and finally got a win there, so that was the third. But then we had a bunch of losing buy trades in a row. 1, 2, 3. Here's a sell trade that was lost. So those are 5 trades in a row that happened to be losses, and then 6, 7, 8, 9 trades in a row that were losses. And it goes to show that losing streaks can happen. And I'm going to show you again what the trend looks like on the 4-hour chart. Okay, so we took these trades on the dip. So here's 1, 2, 3. We took these trades on the dip as well. But the trend changed. Right before the trend changed, we had sloppy trading and entries that happened. And we never knew that the trend was going to change and go back and break down because we can't foresee the future. It's just how it works with the market. Okay? So we bought on this dip, and that worked out. We sold on this dip, and that worked out. But then when the trend was changing again, that's when we have these small losses that turn out to give us the streams of losses that nobody is showing you how to handle. Okay? So if I change the settings to my regular pinpoint settings, so that is the one that I'm showing you on the MyFX book. Change the pair. I'm going to show you what this looks like with a heavily modified version of this algorithm, trading on the best pairs that I've seen over the last 17 years using the strategy. Okay? So here we are. And we're taking, using the strategy and adding a little bit extra on top of that. So we're adding an indicator called A&G candles. This is also not available to the public. But this combination, this is a 3 indicator combination for the pinpoint algorithm. Not only are we're not just entering when the RMI strategy or the RMI indicator goes above and goes below, we're now waiting for a third indicator, which is the E&G candles. And this indicator shows me inside candles, bullish engulfing candles, bearish engulfing candles. So it's bringing candle patterns into the mix. So that means that we only shoot for an entry when the trend is down, okay, in this case, when the RMI is above our 70 level, or whatever level we choose. It's not 70 all the time. And we have our bullish engulfing or inside candle pattern indicator showing us where there are entries, and we need all of these things to be in agreement. So the RMI, the trend going down, and our candle pattern indicator all at the same time, and that's when we enter the market right there for a trade. And we're only taking 15 pips profit on the pound US dollar. So this is very, very thought out, and shows that this kind of strategy, or this strategy, has been profitable for the last 17 years. And going back to the stats here, this is what good trading, good conservative trading looks like. And I urge you guys to pull your expectations back, to not overshoot, to not over risk your account, to not over risk your strategy, because it's possible whatever strategy that or algorithm that you're using, you're just pushing it too hard, causing it to have unnecessary losses. So pull your risk back, and you're likely to reach this goal at some point. All right, thanks for watching. See you on the next one.